Number 3, Honourable David Parker.
Thank you, Mr Speaker. My question is to the Minister of Finance. Has he received any report from the Treasury disproving the analysis from Westpac's chief economist that a proposed 15% tax on capital gains on investment property would have a significant effect on the net present value of residential rental property investments, and if so, will he table that Treasury report?
Honourable Stephen Joyce.
Well, Mr Speaker, on behalf of the Minister of Finance, firstly, for the benefit of the member, I note that Westpac advise that their absolute clear preference is for a comprehensive capital gains tax on all properties in New Zealand. Now, I have not received a report from the Treasury on the particular proposal the member refers to. However, Treasury has advised on the expected general effects of capital gains taxes over and above the one we actually already have, which apply when assets are bought and sold for profit. And again, I should point out the Treasury's preference, if there was to be a capital gains tax, would be a comprehensive one as well. Anyway, Treasury said that while a capital gains tax would deliver no long-term reduction in house prices and, quote, the majority of the effect, well, you can disagree with Treasury, we know you don't accept their advice anymore, the majority of the effect would be felt by tenants through higher rents. So the majority of the effect, this is according to Treasury, which Mr Parker doesn't listen to, would be felt by tenants through higher rents. Another report said the devil is in the detail, working out whether the pros outweigh the cons of a capital gains tax would be a substantial exercise, and the IRD's view, which was also reported by Treasury, was that the practical disadvantages were likely to outweigh the advantages.
Point of order, Mr Speaker.
Point of order, Honourable David Parker.
I seek leave to table the Treasury report dated 27 September 2012 on information of a capital gains tax limited to investment housing.
The document's now been well described. A Treasury report dated 20th September 2013. Sorry.
27 September 2012.
27 September 2012. Is there any objection to that Treasury report being tabled? There is not.
Supplementary.
Supplementary question, Honourable David.
Does he agree with the advice in that Treasury report that the taxation of capital gains on investment housing, excluding the family home, will redirect investment into savings and the productive economy?
Honourable Stephen Joyce.
Mr Speaker, on behalf of the Minister of Finance, I don't have that particular quote from the member, but I do have the quote, which I suspect is from the same report, which says there would be no long-term reduction in house prices and the majority of the effect would be felt by tenants through higher rents. And once again, Mr Speaker, Treasury's preference is for a comprehensive capital gains tax on every single New Zealand house.
Supplementary.
Order. Supplementary question, Honourable David
Well,
Parker.
does he agree with the advice of the Treasury in that same report that the taxation of capital gains on investment housing, excluding the family home, and I quote, will reduce the price of housing and increase affordability of owner-occupied housing?
Honourable
Mr. Speaker,
Stephen Joyce.
on behalf of the Minister of Finance, no. And in that case, any suggestion that putting a capital gains tax on 25% or thereabouts of New Zealand housing would have that sort of effect is an exaggeration. And if you want to see an example of where that's been done and it hasn't been successful, look at Sydney, Australia, Mr Speaker.
Order. Supplementary question, Tim McIndoe.
Thank you, Mr Speaker. To the Minister, what other comments have Westpac economists made about an additional capital gains tax in New Zealand?
Well, Mr Speaker,
Honourable Stephen Joyce. Order.
on behalf of the Minister of Finance, I've seen two other quite relevant comments from Westpac economists highlighting very significant drawbacks of adding an additional capital gains tax. The first is they point out that it's unlikely to happen because it would be complex to administer, and worse, much of the burden would fall on tenants who tend to have low incomes, which is exactly the same advice as received from Treasury. The second comment I've seen from Westpac is that top-end properties would be less affected by a capital gains tax than low-end properties, so price differentials between high-priced houses and low-priced houses would widen. That's because investors are less prevalent at the top end of the property market. So it is rents at the bottom end of the market that would be most affected. So once again, the Labor Party, in their attempt to fiddle around with the economy, would lift costs on those members of society that could least afford that. So there are two very good reasons, in addition to many others, that an additional capital gains tax is yet another dead end for Mr Parker.
Supplementary.
Supplementary question, Honourable David.
Well, does he agree with the advice of the Treasury in that report that the taxation of capital gains on investment housing, excluding the family home, will, quotes, reduce the level of foreign borrowing compared to the status quo?
Honourable Stephen Joyce.
Mr Speaker, on behalf of the Minister of Finance, the reality is we have a capital gains tax on investment properties right now. We have tightened rules for loss attributing qualifying companies. We have prevented property investors from using rental losses to inflate working for families' payments. We've increased inland revenues funding to target property speculators, and that has been raising $2.5 billion in additional tax. So the opposition act like there isn't a capital gains tax on investment properties now, and there is.
Supplementary.
Supplementary question, Tim McIntyre.
What other reports has the Minister seen from Westpac about the New Zealand economy?
Order. Honourable Stephen Joyce.
Well, on behalf of the Minister of Finance, it's interesting. Mr Parker's new friends at Westpac have been actually considering the nature of the New Zealand economy after the next election, Mr Speaker. And they actually say, depending on the outcome of the next election, the market implications would be substantial. For example, if a certain outcome occurred, they would see a downturn in domestic demand, a period of slower economic activity due to business uncertainty, businesses holding off on investment and hiring decisions, and difficulties for a new government to keep government spending in check, which would push up interest rates. That, Mr Speaker, is the Westpac prognosis under a Labor Greens government.
Supplementary.
Supplementary question, Honourable David Parker.
Why doesn't he stop the pretence and admit that National's housing policy has been totally ineffective and adopt Labor's comprehensive housing policy, which addresses both demand and supply by implementing a capital gains tax excluding the family home, building 100,000 affordable houses and restricting purchases by offshore buyers?
Mr Speaker, on behalf of the Minister of Finance, in Mr Parker's bubble that would make a difference, but actually it's the policies that some parts of Australia have had for some time, and their house prices are higher than New Zealand's, Mr Speaker. This government's policies of freeing up the supply of housing have doubled the number of houses being built over the last 3 years, Mr Speaker, and those numbers are continuing to climb. This government, it is absolutely correct, and this government is focused on managing growth positively for jobs for Kiwi builders and Kiwi construction workers, not clamping down with yet more taxes to drive the economy back into recession, which is the proposals of the Labor Party.
Question.
Order. 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 Supplementary question, Tim McIntyre.
Thank you, Mr Speaker. What other reports has the Minister seen opposing an additional capital gains tax because of its many drawbacks and problems?
Well, weirdly, Mr Speaker, I have seen, on behalf of the Minister of Finance, a very interesting speech to the Property Investors Association conference, which was in July 2005, Mr Speaker. This speech, which was unusually good by a minister for the standards of the time, noted that the government of the day agreed with a review known as the McLeod Review, which concluded that the disadvantages, be quiet Mr Cunliffe, I'm coming to your punchline, which concluded that the disadvantages of such a tax, such as its complexity and costs, outweighed any theoretical benefits. And the Speaker at that speech went on to say that the government of the day believed that the status quo was entirely adequate, and that any form of new property tax should be off the agenda. That speech was delivered by none other than the then Associate Minister of Finance, David Cunliffe.
Order. Question. Order. Order. Question number 4, Materia Ture.
Thank you, Mr Speaker. Tēnā koutou e te whare. My question is to the